Bitcoin has captured the world's attention, yet investing in Bitcoin directly can be daunting. This is where spot Bitcoin ETFs come in. They offer a familiar and regulated way to gain exposure to this revolutionary asset. An ETF, or exchange-traded fund, is like a basket of assets. You buy shares in the ETF. These shares represent ownership of the underlying asset, in this case, Bitcoin. Spot Bitcoin ETFs hold actual Bitcoin. This is different from futures-based ETFs. Spot ETFs track the price of Bitcoin more accurately. They offer investors a direct investment opportunity. The significance of spot Bitcoin ETFs cannot be overstated. They provide legitimacy and accessibility to the crypto market. This is especially important for institutional investors. Spot Bitcoin ETFs streamline the investment process. Investors can buy or sell shares on traditional stock exchanges. This ease of access is expected to drive significant adoption. In the arena of finance, BlackRock and Fidelity are giants. Both institutions command respect. They have long histories of managing trillions of dollars in assets. BlackRock, known for its iShares ETFs, is a behemoth. It is the world's largest asset manager. Fidelity, with its focus on mutual funds and retirement planning, is a stalwart. Both companies bring their own strengths to the table. BlackRock's vast resources and global reach are unmatched. Its experience in pioneering new ETF products is extensive. Fidelity, on the other hand, has been a crypto pioneer in its own right. It launched its digital asset custody business, Fidelity Digital Assets, back in 2018. The competition between BlackRock's IBIT and Fidelity's FBTC is fierce. It is a testament to the growing maturity of the Bitcoin market. Investors are presented with a compelling choice. The entry of these financial titans into the Bitcoin ETF arena is a watershed moment. Institutional adoption of Bitcoin is not a question of if, but when. Custody is a critical aspect of any investment, but it holds even greater weight in the world of Bitcoin. Unlike traditional assets, Bitcoin exists only on a decentralized ledger. This makes securing private keys paramount. IBIT and FBTC address this concern through partnerships with reputable custodians. Coinbase for IBIT and Fidelity Digital Assets for FBTC. Coinbase, a publicly traded company, is a household name in the crypto space. It boasts a user-friendly platform and a strong track record in security. Fidelity Digital Assets leverages Fidelity's decades-long expertise in financial services and security. Both custodians employ robust security measures, including cold storage, multi-signature authorization, and regular audits. They provide investors with peace of mind, knowing their Bitcoin holdings are protected by industry-leading practices. Fidelity Digital Assets' vertical integration within the Fidelity ecosystem provides a unique advantage. It allows for seamless integration with Fidelity's brokerage and other financial services. The choice between Coinbase and Fidelity Digital Assets ultimately boils down to trust and integration. Both custodians offer a high level of security and reliability, ensuring the safekeeping of investors' Bitcoin holdings. Liquidity and trading volume are essential factors to consider when investing in any ETF, and Bitcoin ETFs are no exception. High liquidity ensures that investors can buy and sell shares easily without significantly impacting the price. While it's still early days for both IBIT and FBTC, their association with BlackRock and Fidelity, respectively, suggests they are well positioned to attract significant liquidity. BlackRock's iShares platform is renowned for its highly liquid ETFs. Similarly, Fidelity's vast customer base and strong presence in the retail brokerage market could drive significant interest in FBTC. Investors should closely monitor the trading activity of both IBIT and FBTC. The early liquidity and trading volume of IBIT and FBTC will be crucial indicators of their long-term success. Fees and waivers, unpacking the cost of investment. Investing always involves costs, and ETFs are no different. IBIT and FBTC, like all ETFs, charge an expense ratio, which is an annual fee deducted from the fund's assets to cover its operating expenses. These expenses include management fees, administrative costs, and custodian fees. Both BlackRock and Fidelity are known for their competitive pricing in the ETF space. They are likely to offer attractive expense ratios for IBIT and FBTC to attract investors. However, the exact expense ratios for these ETFs have not yet been announced. Investors should compare the expense ratios of IBIT and FBTC with other Bitcoin ETFs and alternative investment options to assess their cost effectiveness. In addition to the expense ratio, investors should also be aware of other potential costs, such as brokerage commissions and trading spreads. Choosing the most cost-effective Bitcoin ETF involves a comprehensive assessment of expense ratios, trading costs, and any fee waivers offered by the ETF provider. Investors should carefully review the prospectus and other relevant materials to make an informed decision that aligns with their investment goals and budget. Tax efficiency and retirement planning, securing your future. Tax efficiency is a crucial consideration for any investment strategy, and Bitcoin ETFs are no exception. The tax treatment of Bitcoin profits can be complex and varies depending on the jurisdiction and the specific investment vehicle used. However, holding Bitcoin within an ETF structure can potentially offer tax advantages compared to directly owning Bitcoin. One potential benefit is the deferral of capital gains taxes. When investors buy and sell Bitcoin directly, they may incur capital gains taxes on any profits realized. However, when holding Bitcoin within an ETF, capital gains taxes are generally only triggered when the ETF shares are sold. Another potential advantage is the ability to hold Bitcoin ETFs within tax-advantaged retirement accounts, such as IRAs or 401(k)s. Investors should consult with a qualified tax advisor to understand the specific tax implications of investing in IBIT or FBTC. Ecosystem integration's seamless investing experience. The convenience and seamless integration of an investment product within an existing brokerage account or financial ecosystem can significantly enhance the user experience. IBIT and FBTC, backed by BlackRock and Fidelity respectively, offer distinct advantages in terms of ecosystem integration. IBIT, as part of BlackRock's iShares ETF family, seamlessly integrates with a wide range of brokerage accounts and trading platforms. BlackRock's iShares ETFs are widely available across major online brokerages and financial institutions, making it easy for investors to incorporate IBIT into their existing portfolios. FBTC, on the other hand, benefits from Fidelity's robust and well-established brokerage ecosystem. Investors who already use Fidelity for their brokerage, retirement, or other financial needs will find it incredibly convenient to add FBTC to their portfolios. Fidelity's platform is known for its user-friendly interface, comprehensive research tools, and excellent customer support. The choice between IBIT and FBTC, from an ecosystem integration perspective, depends largely on the investor's existing brokerage relationships and preferences. The future of Bitcoin. ETFs, long-term outlook and predictions. The approval of spot Bitcoin. ETFs is widely seen as a watershed moment for the cryptocurrency industry. It marks a significant step towards mainstream acceptance and is expected to attract a wave of new investors to the Bitcoin market. The long-term outlook for Bitcoin ETFs, including IBIT and FBTC, is promising, driven by several factors. Firstly, the growing demand for regulated and accessible investment vehicles for Bitcoin is undeniable. Institutional investors, who have largely remained on the sidelines due to regulatory uncertainty and custody concerns, are now presented with a familiar and trusted way to gain exposure to Bitcoin. This institutional adoption is expected to fuel significant growth in the Bitcoin ETF market. Secondly, Bitcoin's limited supply and decentralized nature make it an attractive hedge against inflation and economic uncertainty. However, challenges and uncertainties remain. Regulatory scrutiny of the cryptocurrency industry is ongoing, and future regulations could impact the operation and adoption of Bitcoin ETFs. Despite these challenges, the future of Bitcoin ETFs appears bright. IBIT or FBTC. Making the right choice for you. Choosing between IBIT and FBTC, the two leading contenders in the spot Bitcoin ETF arena, ultimately depends on individual investor preferences, risk tolerance, and existing brokerage relationships. For investors seeking the backing of the world's largest asset manager and a potentially more liquid ETF, IBIT, managed by BlackRock, could be the preferred choice. Investors who prioritize a seamless integration with their existing Fidelity accounts and value the company's reputation for customer service might find FBTC to be a more appealing option. Ultimately, the decision should be based on a thorough assessment of individual circumstances and investment goals. Factors such as expense ratios, liquidity, custody solutions, and ecosystem integration should all be taken into account. Both IBIT and FBTC offer investors a regulated and potentially less intimidating way to gain exposure to Bitcoin. As with any investment, careful research, diversification, and a long-term perspective are key to navigating the exciting world of Bitcoin ETFs.